Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Jumping into last week big news, we have quite a variety pool of information, very interesting, both from the fundraising standpoint, the venture capital ecosystem, and also some curious information that it's worth sharing, and we'll dig deeper as we move along. So starting, let's talk about AAvantgarde Bio, a biotech startup raising 61 million euro in a round participated by Atlas Venture, Forbion, and Longwood Fund. So this is, I thought, particularly interesting because, first of all, biotech deals, they keep raising interesting capital. And what is interesting is also that it's not only Italian capital, but it tends to be pretty much like international capital. And that's the element that I found particularly interesting. Just to give some context about the company. So the company has a very interesting history. It was founded in 2021, so it's relatively new. Essentially what they do, and probably people with a PhD in bioengineering will hate me, but let me simplify what these guys are doing from the way I understand it. So essentially they're working into the next generation genetic therapy for retinal hereditary diseases in particular. So a very specific, narrow field of research. What they've been working on is a way to transport fragmented genes in a way that they kind of reassemble in a cell and then deliver protein in a very targeted way. So genetic therapy works through basically production of protein from, again, the very overview understanding that I have. And these guys are pretty much working into making that specifically efficient for specific genetic disease. So roughly, this is the idea. What is interesting is that this is a company that is pretty young. The headquarters is in Italy. And the amount of capital is definitely pretty interesting, one of the big one. So 61 million. From what I understand, again, this is something that we notice in biotech deals, is that this is pretty much like POC money. So essentially, it's a huge round in startup land, but essentially, as the biotech ecosystem work, this is essentially to try a few different proof of concept in therapy. So that's always nice to keep in mind, I think, when we talk about early stage companies in biotech. Another interesting element, I think, is the pool of investors. So we always complain that international funds have a hard time investing in Italian startups. Well, that's not the case in the biotech industry, actually, because all the three investors are international, starting actually from Atlas Ventures, so Boston-based US fund focused on biotech, 2.2 billion asset under management. So pretty much the whole venture money that Italy spends in a peak year and just in a biotech fund as a little aside.
Thank you for the perspective and courage.
Size, we need to understand size in the proper way, right? So when we talk about big numbers, either we use logarithmic scales, or we need visual, appealing metrics, so we can actually get a real sense of what we're doing.
Yeah, let's only talk in terms of number of zeros. I mean, this is a 9 zeros fund, or 3 commas to use another.
3 commas, exactly. Three commas. I love that. Excellent. So the second fund also is called Forbion, based on Netherlands, but actually they also have different headquarters around the world, so very active internationally. They spread 3 billion under management across 6 different funds. And what is cool is that it's a multi-stage. Their strategy is multi-stage. So all these 6 funds basically cover different stage of development of health and bio startup companies. So literally from seed to Series C. So it's a very, very broad spectrum of investment. And finally, Longwood. So Longwood Fund again, US based. Both of these investors are based in Boston. So again, Boston is probably like very active in terms of international biotech, both with the universities and research centers. So that's worth underlying this element. Rather smaller compared to the other, 300 million in under management. And what is interesting is a fund that is led by previous executive in the industry. So very hands-on, very active, and very, I would say, functional to the kind of investment they're making. So good job for actually, and good news for Italian biotech, because people internationally are still and actively looking into the space. And it's kind of like different from what we've seen in other verticals. So that was my speech, Nick. It's a lot of info. What do you think of these elements? It's a vertical that we don't particularly follow closely, but I think it's curious to see what are the similarities and the difference.
Yeah, well, you said it all, and actually the only thing that might add is that life science as a vertical in Italy is much more mature than software digital. There are a lot of managers, a lot of competence, a lot of knowledge and relationships internationally, and you can see it from rounds such as this one. And I may add that in 2021, when AAvantgarde was launched, the original seed investor was Sophie Nova. That's again a French fund, but they invested through their joint venture fund with Teleton. And this is one of the funds that was launched within the ItaTech program, the one where Cassa Depositi e Prestiti, CDP, teamed up with the European investment funds in order to start Italian funds focused on technology transfer. So this is one of those mixes that is actually working, and it brought in more investors into a company that actually was started from technology transfer, originated by an ItaTech fund.
Awesome.
So nice work.
No, love it, absolutely. Moving on, let's talk about Isaac, building integrity startup, raising 5 million in a round led by CDP VC. So essentially what they're doing, the founders in Isaac, is essentially providing technology to make buildings smart in a way that they can actually prevent and in a way treat, so to speak, problems with earthquake or potential structural damage that might appear consequently to an earthquake situation. So I thought it was a very nice application of the concept of a smart building and smart home. So it's not just all the Alexas and all the smart devices that you might see in houses. This is extremely practical and very much on the preventive side. So I thought it was a very interesting product that they put out on the market.
Yes, that's quite interesting actually. You're right, because usually you see in the seismic market a lot of proposals about monitoring. So hey, there's a strong earthquake or a weak earthquake and the building is damaged or not damaged. In this case, they developed a technology to actually counteract the effects of an earthquake on the building, so actually protecting the building. So we call it active protection. Quite interesting. And the round, this is not the first round that they raised. They had original investments from 360, one of the prominent Italian funds. And this round was led by CDP, Venture Capital, with two funds. The Deep Tech Fund, Evolution, and one of those new funds with the corporate team up strategy, let's say so. They have one of those specific funds that's called Infrastructure Tech, and it's actually focused on investing in startup acting on infrastructure.
Cool. Fantastic. Let's talk about Vection Technology. The Vection Technologies announcing the acquisition of InVRsion. So InVRsion. So definitely very, I would say contemporary in the sense, and very relevant, especially on everything that is happening right now and lately into VR. So yeah, what is your take on this one?
Well, it's exactly it happened in the same week as the announcement by Apple of the VR product. So perfect timing, either in the positive sense or negative sense. You have to say Vection Technologies is not new to this, because they're actually focusing on the VR extended reality market. Vection is an Australian-Italian company, so they are listed in Australia, but actually the core team, the management is from Italy. And they've been investing and acquiring quite a lot of companies in this XR and the virtual reality market at large. So they've been in quite a big portfolio. It's probably a good positioning if the VR tool by Apple actually manages to create the VR market as we expected, because there is no real VR market right now. But if it creates the market, maybe it actually is well positioned to catch a part of it. The focus is on the B2B side, not on the consumer side, but still, that's probably a very nice position to be in. We'll see. Since this Vection is listed, nothing of what I said is investment advice. So please make the research.
Exactly, and nothing we say here is investment advice. This is purely a research in our own speculation, for sure.
Yeah.
Moving on, Deep Ocean Capital announcing Deep Blue Ventures. So again, you always highlight like new funds coming up, and I think that's absolutely valuable just to see exactly what is the status of the investment ecosystem and investor ecosystem. So Deep Blue Ventures, seed early stage fund focused on deep tech, specifically on space and AI, with actually branches, which basically with technologies that branch out to health as well. So it's kind of broad, in a broad spectrum. The fund starts basically operations with 40 million euro as committed capital, and the expected closing is around 70. So it's quite a medium to large fund, I would say, on Italian standards. Very interesting because is women led. One of the chief operator there is a lady with a lot of experience in the field. So again, a lot of interesting elements that happening right there.
Yeah, it's the first fund in a while, I have to say. We haven't seen new fund starting or announcing the first closing for quite a few months. It's probably some kind of signal that the market has been quite lazy and or frozen in the last 6 months at least. So very good news to have a new management team launching a fund in an important vertical. So AI, space tech are probably strategic verticals, and we really need money and competence investing there.
Yeah. The other, I think, interesting elements of this is that it's backed not only by CDP, but we also have Leonardo and the European Space Agency backing the fund, and they've been active for sure in supporting like new potential investment operator in the field. So it's a great strategy. I mean, Leonardo in particular, probably they've been extremely active across the years. We've seen them moving in different deals. So that's very interesting. I would also add another element, which I thought was interesting. It doesn't really emerge too much. So the model of this fund is both fund and what they call startup factory. So essentially, it's just briefly mentioned. I think we'll see probably something moving in the future, where basically they also want to leverage all the ecosystem of startup studios, accelerator, and incubators. And so they're trying to actually make a nice dual model over there with fund, but also like the startup factory. So I'm very curious on how exactly this is going to go, because the factory model, the startup studio model, is something that we've been talking about. It's becoming really popular in Italy. I mean, with its pros and cons, people love it, some people hate it. But it's very good that actually there is like an impulse to actually try something like significant, and to build something significant around an ecosystem. So that's very interesting. All right, let's talk about the publication from Italian Tech Alliance about the study of investors in Italy. So Nick, that you share like a very interesting link. Basically, it's a study conducted on, I believe, 35 different funds. So what essentially it's been doing, I mean, what the analysts have been doing is essentially like compiling data from the kind of LPs and the type of investor that participate to these different funds. And they include like some of the major and the more active, the most active funds in Italy, I would say. And some interesting pattern have emerged, I would say. So let me kick off maybe with like a small like some of the conclusion, and then you tell me what caught your eye in particular. So first of all, the amount of dry powder apparently is like still available is not bad. Is 1.1 billion. So that's significant. So basically, this is unused capital that funds are holding, waiting to deploy, in particular in specific deals. So capital didn't really like dried out. It's still there. It's just a very slow market, as we mentioned before, and we're halfway like the year. There is still time. So for all the founders out there, I would say there is hope even in this slowing down of the whole macro context.
Yeah, that's a nice point. I'm curious about this number because this number hides a lot of nuances. Think of one. It's about if about 50% of capital in a listed fund is actually being invested and only 50% is still available. A lot of that capital is probably destined to follow-ons and not to new investments because of math, more or less, no?
Yeah.
So over there, it would be nice to know more about actually the average age of the funds, because if the average age is closer to the 5th year, 4th year, 6th year, well, that's even worse. It means that that's mostly follow-on capital. If the average age is younger, then good news. It means that there is more dry powder for new rounds.
Good point.
That's something to keep an eye on. And then, as you mentioned, there are two numbers that catch the eye. The first one is that 50% of all the capital comes from sovereign investors, EIF
yes.
and CDP, basically. And that says quite a lot on the maturity or immaturity of our markets. And on the other end of the spectrum, how little capital is actually committed by institutional investors. So the real capital movers in the finance sector at large, pension funds, bank foundations, stuff like that. So investors like those. There's a long way to go.
I mean,
Jack.
There is a long way to go, I agree. And it's surprising the fact that actually, as you say, institutionals like pension funds and insurance, they amount as less as corporate investors and banks in general, and actually less than private investors like family offices. So that's pretty significant. I agree with you. Surprising though, I mean, on the positive note, corporations are holding. So they're like exploring more and more and deploying capital there, which is positive. I mean, the big player here, as you say, is definitely like sovereign funds, like CDP in this specific example. But comparing this kind of structure to what happens in more evolved ecosystems, we have the reversal of between sovereign investor and institutional investor, where actually institutional investor plays play the majority role into as LP in a lot of different funds. And really in the US market, starting from pension funds, firemen, or whatever else category like fund, to like university endowments that actually are very active investors. We don't have that element, for example, in Italy, but that doesn't mean that
endowments.
Yeah, but that doesn't mean that actually more evolve like insurance, investors or different kinds of like institutional can actually take that role. I don't know. I mean, it's interesting. It would be interesting to see whether it's a matter of culture, is a matter of sophistication, is a matter of like portfolio management. I mean, the classic way of thinking of endowments is really always to allocate a percentage to alternatives, being it hedge funds or venture capital. I don't feel in Italy we do have this kind of way of thinking. There is way more conservative thinking, I would say. So they'll be curious to actually like have the same kind of study, but related on institutional, like digging deeper into this number about institutional. I mean, definitely good job from the guys of Italian Tech Alliance to do this, but let's go one level beyond that and actually like have more insights to that.
Yeah, I agree. I mean, having been on the front line fundraising, I got some feelings about what's going on that side. And one important component is education. So, not strictly speaking, education about venture capital, but about putting an allocation in venture capital in a portfolio. I mean, when you're used to moving around chunks of capital in the order of the tens of millions, if you're a big money manager, you basically think in terms of tens of millions of allocation. And you're talking to an operator with a 50 million total commitment on the fund, you're not ready to allocate, 5 million in that fund, because it's like, how do I even spend time on that? So there are a lot of nuances there that boil down a lot to education and learning how to put that asset class into your portfolio allocation, because they do understand VC as a product. Many are not, strictly speaking, ready to allocate on it because inertia, because of historical ways of allocating portfolio. I mean, and if it works, you don't change it. I mean, if it works, you don't break it. You don't risk breaking it because you try something new. So there is a lot of inertial barriers to break down.
Yeah.
Things are moving.
No, that's a great point. That's a great point. Yeah.
And then the last point that I would make is about the allocation by the investment teams. I can see in the page. So the SGR teams invested like 67 million in their funds. So putting their mouth where the food is, 2-3% of the allocation. Not too shabby. So managers are believing in what they're doing. They're
starting to believe. Yeah, no, exactly. Great point. All right, to conclude on a fun note about what we've been discussing with GPT and the ban of GPT a few weeks ago, we've been discussing on how exactly that would impact the ecosystem. And finally, you found the research actually confirming
now we know.
What we've been. Now we know exactly numerically what our intuition would have told us, but in a kind of a good way, I would say, because the research that you mentioned is that so a study has been conducted on the GitHub activity of about 8,000 Italian developers working on GPT related project. So right after the ban, and correct me if I'm wrong, the activity of those accounts was like slashed by 50% for just about 2 days, until basically somebody woke up and understood that VPN can actually bypass the GPT ban, and people can still build on top of on GPT-4. So it was interesting. It was a very interesting study. So Nick, thanks for sharing. That was awesome.
Yeah, I mean that's I wonder what happened during those 2 days. I mean, in a way, you might wonder how is it possible that ChatGPT was so entrenched in the development processes since it has been around for just a few months, right?
Good point, yeah. Good point.
And on the other side, if it wasn't, probably every developer was just looking for new ways to access ChatGPT just because they wanted it, so not because they needed it. So, I mean, it would be nice to explore the root causes of this. But again, 50%, quite a big number.
Yeah. I mean, probably one of the insight from this is really the power of laws that can actually like put a big brake on certain like edge technologies that are starting to develop. That doesn't mean that we're completely stuck, because of course the ecosystem is still building, is still early stage. There is still room. We're not behind, I would say, but definitely if this thing would be longer in time, that can actually harm. I mean, it's powerful. The harm that can make is actually like relevant. So jokes aside, I think that's something to think about, especially when the government sort of interact with new technologies happening on the market.
Yeah, it is very nice to see this type of researches about the immediate effects of legislations, government decisions.
Yeah.
That's
very
interesting. They have an effect.
Awesome.
I mean, it's nuanced. So, that's not exactly the decision of the government. It was OpenAI who closed down ChatGPT. Blah, yeah, I know that. Please don't write me with them, but I know that still.
Yeah, I mean, definitely an article worth reading and to explore. So, Nick, thank you so much for the discussion, and I'll see you next week.
Ciao, Jack. Thank you for the conversation. It was great as usual. Have a great week.